MIA by Law, Professional Ethics, Conduct and Practice of the Malaysian Institute of Accountants. There are 5 fundamental principles and conceptual framework, which is integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. The first one is integrity. It is to be straightforward and honest in all professional and business relationships. Second, objectivity. Not to compromise professional or business judgments because of bias, conflict of interest, or undue influence of others. Third, professional competence and due care. 1. To attain and maintain professional knowledge and skill at the level required to ensure that a client or employing organization receives competent professional service based on current technical and professional standards and relevant legislation. 2. To act diligently and in accordance with applicable technical and professional standards. Other fundamental principles. 4. Confidentiality. To respect the confidentiality of information acquired as a result of professional and business relationships. Fifth, professional behavior. To comply with relevant laws and regulations and avoid any conduct that the professional accountant knows or should know might discredit the profession. Also, when undertaking marketing or promotional activities, a professional accountant shall not bring the profession into disrepute. Threats to compliance with the fundamental principles fall into one or more of the following categories. First, self-interest threat. The threat that a financial or other interest will inappropriately influence a professional accountant's judgment or behavior. Second, self-review threat. The threat that a professional accountant will not appropriately evaluate the results of a previous judgment made or an activity performed by the accountant or by another individual within the accountant's firm or employing organization on which the accountant will rely when forming a judgment as part of performing a current activity. Third, advocacy threat. The threat that a professional accountant will promote a client's or employing organization's position to the point that the accountant's objectivity is compromised. 4. A familiarity threat. The threat that due to a long or close relationship with a client or employing organization, a professional accountant will be too sympathetic to their interests or too accepting of their work. 5th, intimidation threat. The threat that a professional accountant will be deterred from acting objectively because of actual or perceived pressures, including attempts to exercise undue influence over the accountant. Safeguards are actions, individually or in combination, that the professional accountant takes that effectively reduce threats to compliance with the fundamental principles to an acceptable level. The professional accountant shall form an overall conclusion about whether the actions that the accountant takes or intends to take to address the threats created will eliminate those threats or reduce them to an acceptable level. In forming the overall conclusion, the accountant shall A. Review any significant judgments made or conclusions reached. B. Use the reasonable and informed third-party test. Accountants in public practice are required by international independent standards to be independent when performing audits, reviews, or other assurance engagements. Independence is linked to the fundamental principles of objectivity and integrity. It comprises 1. Independence of mind. the state of mind that permits the expression of a conclusion without being affected by influences that compromise professional judgment, thereby allowing an individual to act with integrity and exercise objectivity and professional skepticism. 2. Independence in appearance, the avoidance of facts and circumstances that are so significant that a reasonable and informed third party would be likely to conclude that a firm's or an audit or assurance team member's integrity, objectivity, or professional skepticism has been compromised. Method of practice. A member in public practice is not allowed to practice as a chartered accountant or licensed accountant other than A. in his or her own name, or B. in the name or names of his or her partner or partners, being chartered accountants or licensed accountants, or C. in the name of a firm existing at the time of the coming into operation of the act or form thereafter, provided that the partners in Malaysia are eligible to be registered as chartered accountants or licensed accountants. Next, a member in public practice should not allow the name of the firm to be used by any organization to conduct business that is incompatible to public practice or which would bring the profession to disrepute. Besides, a member in public practice should not report or express an opinion on financial statements examined for the purposes of such report or opinion by a person other than a staff or member of his or her firm, unless such other person is also a member in public practice, except for entities which are incorporated or operating outside Malaysia. Lastly, a member in public practice should not assist by any means and in any manner whatsoever any person who practices or holds himself or herself out as a chartered accountant, auditor, tax consultant, tax advisor, or any other like description in contravention of the Act or any other law for the time being in force in Malaysia. Audit fees. Professional fees charged by members should be a fair reflection on the value of work performed for the client, taking into account of 1. The skill and knowledge required for the type of work involved, 2. The level of training and experience of the persons involved, 3. The time necessarily spent by each person engaged on the work, 4. The degree of responsibility and urgency that the work entails. Commission and referral fee. The auditor should not receive or pay a referral fee or commission which will create self-interest unless he or she establish safeguards to eliminate or reduce them to an acceptable level by A. Disclosing to the client the fact of receive and pay a referral fee or commission, B. Obtaining advance agreement from the client. Standards on auditing. International standards on auditing are professional standards for the performance of financial audit of financial information. These standards are issued by International Federation of Accountants through the International Auditing and Assurance Standards. Malaysian approved standards on auditing. The Act requires companies incorporated under the Act to have their financial statements audited following the Malaysian approved standards on quality control, auditing, review, other assurance and related services issued by the Auditing and Assurance Standard Board of the Malaysian Institute of Accountants.